Welcome back, everybody, to the JSS Podcast. I am Byron Enriquez, your resident finance bro, the casual executive, sitting down today, and we got a topic today. I've been just busy. New Year's starting off good for us, and we're busy talking to a lot of different people and having different conversations. And in thinking about what I wanted to talk about today, just something that, in conversations I've had with my wife and some clients. And today I wanted to talk about what separates a casual investor from a professional wealth builder, somebody who's out there working and making their money work for them. And going back and forth and how I can put that into, I guess, the least amount of words or put that into a way, it's a way to understand it better. The difference I see and I've seen over the many years that I've been doing this is that the real investors are not treating this as a hobby, and I think that's the biggest mistake that a lot of investors make is, and I use the term investor almost very, very loosely because it's a hobby. They either have some money or they have a 401k or they got some money inherited or, they bought real estate a long time ago and they've had some appreciations. And then all of a sudden they don't know what to do. Right. And they go into these situations where they want to become an investor and they want to invest. And the conversations I have with them is, what are you trying to accomplish? And most of them can't answer that. They approach this in an emotional way. They approach this as in almost like keeping up with the Joneses is, hey, one of my friends has 2 investment properties or has a rental property, so I want to do the same. But they don't know what they're really after or what they're really doing. They don't track numbers. They don't plan for their taxes. And then they're shocked at the end of the year when all of a sudden they're like, oh, I have to pay this amount of money. Conversation I was having with somebody else, recently was that, it's people don't take the time to plan ahead. People don't take the time where it's just like, hey, I have a rental property. I moved up and I bought another property using the equity in this property. And then it's a hobby, right? Maybe it's not a hobby, but they think they're an investor, but they don't have the tools in front of them. They don't really have, and I think a lot of it is a mindset, right? And this is one of the things I was teaching somebody this past week is, it's a switch you have to flip in your head as, hey, I'm going to change this and I'm going to turn this into a business. I'm going to have separate bank accounts. I'm going to set up an LLC. I'm going to, plan ahead. I'm going to, do the things the right way. One of the things that I teach my sons, and all my kids actually, but one of the things that I teach one of my sons who works here with us, in the office all the time, and I'm constantly kind of hammering it in on him, is, sometimes we're setting things up and we're like, look, we want to set things up the right way from the beginning so that you don't have to come back and correct things. I've consulted with so many different cases where, they're 10 years deep or 15 years or somebody's inherited property in real estate. And then, you're trying to unwind all this mess, because sometimes there is a trust. Sometimes there's not a trust. Sometimes there's a will. Sometimes there's, just endless amount of things. But that strategy wasn't delivered, wasn't put together, and a lot of times people don't even know what they're trying to do. One of the things that, again, to taxes, and I'm not a tax professional. I know my fair share, but I'm not a CPA. I'm not, so I don't want to. This is not tax advice legally, but I can give you some tricks. It's in business and investment. It's a lot of times your biggest expense can be your taxes. Property taxes, income taxes. When you have to report this on your tax returns, how are you reporting? Are you reporting on a Schedule E, a Schedule C? Do you have a separate entity? Are you even reporting your rental incomes on your tax returns? And those are things that people don't think about. They're like, oh, I'm just going to collect cash and just whatever, just deposit it or keep the cash. Which I get it, right? They're trying to avoid paying taxes, but then when they go try to get a loan and they say, hey, this property is cash flowing, I'm making $10,000 a month on it or $5,000 a month. As a banker, one of the things we look for is proof. Hey, show it to me. Is it on your tax returns? If it's not on your tax returns, I can't use it. So now you have a property that's actually losing you money, right? And those are the things that people don't look at. Setting up an entity, an LLC, a corporation, a holding company, and those are things, again, that's what makes the difference between the hobby investor and the professional. Because when it comes to taxes, when you have an LLC or an entity, things you can write off and how you go about the business, how you're reporting that as income changes, right? And you can save yourselves thousands and thousands of dollars a year of money that you would have had paid into taxes. Um, and I can, I teach people how to set those up or do that all the time, because it's a couple $100 or something, a couple $1,000 to get set up. You go through somebody, do it yourself if you feel comfortable, hire a lawyer, and it's not that overwhelming. But as long as you know that the structure of how you're doing it, then you can. It really helps in a lot of things. And not only is it helping asset protection, it's protecting you and your personal assets, but it's also for tax purposes. It's night and day. It's night and day of what you can do and the things you can write off and how you manage that flow. One of the things, and this is the first advice I always tell people, is keep everything separate. If you do set up another entity, don't commingle. That's the first common mistake. Don't commingle. Keep everything as separate as possible. That'll make your life a lot easier down the road, or your CPA or your tax person make their life a lot easier when you're trying to, fill out those things at the end of the year. One of the things that I was, getting into the investment strategies, again, people are like, hey, I want to own an investment property. And I'm like, okay, that's great. What is your outcome? What is your desired outcome? What are you trying to accomplish with this investment property? I ask people that question, and most people don't know the answer. Well, I just want another property. Okay, for what? And I know some people are like, well, what are you talking about? It's good to own real estate. And yes, it is. But if you're approaching this as a business, that is an investment, what are you trying to do? Are you trying to cash flow every month? And you're like, hey, if I can charge X amount of rent, my mortgage payment is this, I'm going to cash flow and I'm going to make this amount of money, and I need that to live off of. That's an approach. I'm not saying that's the right approach or the wrong approach. That's an approach. Some people approach things where, hey, I just need a loss leader. I need, in my the income that I'm making from my job, my full time, or this or that. I'm having to pay so much taxes, so I just need some losses. So I need to invest into an asset where I can claim these losses and offset some of that. That's a strategy, right? And some people may think, oh, you're losing money every month, or every year. And yeah, but as opposed to paying in taxes, losing money on a property, not necessarily a bad thing. A third strategy can be, hey, I just want a property that I can rent out, that doesn't cash flow me, and maybe even loses a little bit of money every month, but or breaks even. But at the end of 30 years, this property will be paid off, and it's going to be paid by my tenants. So that's a retirement, right? That's a different way to approach real estate. Not saying any one of them is right or wrong. I'm just saying there's different approaches, and that's usually should be the first your first conversation with yourself, or with your partners, or your wife, or your husband, or whoever it is that you're investing with, as into what do we want to accomplish with this? What's the point of it, right? It's not, nobody wants to be a landlord for, there's got to be a reasoning for it. And if you approach it that way, and if you have that strategy, then the steps you take will fall into place, right? If you're looking to flip properties, you're looking for different types of properties other than a property you can rent. Long term, you're looking to make short term gains. You're trying to make this into a business where you can flip multiple properties a year. You're making income, right? Again, different approaches, different types of properties, different way you're going to approach the business. So that's the first thing you always want to do. And if you need help, sit down, talk to somebody, talk to me. I'm always available for people. This is what I do. In that consultation, that's usually my first question. It's, what's your goal? What are you trying to do? Right. And if you don't know, then we can walk through it, and I can give you some options, and because that determines how we approach it. Right. So definitely create your investment strategy, right? You want your money to work for you. You want it to do the right thing. There's short-term versus long-term investments. There's debt that can be used as a tool, right? Use it wisely. If you know, again, the strategy, hey, I need a short-term loan, or I need a long-term 30-year note, I need 30-year fix, or sometimes I just need the cheapest payment possible because I'm going to sell this property in a couple months, right? Again, without knowing your strategy, you can't. I kind of want to say you can't afford you can't afford it, right? Just because you don't know the approach and you don't know what you're doing. You want to know your numbers. You want to know, hey, this is going to rent for this. This is how much it's going to cost me for this. Utilities, property taxes, insurance, hiring a property manager, all the things that fall in, right? Am I going to go with a private lender? Am I going to call JSS for them to give me a loan? Am I going to go to my home bank where I have my checking account and have them give me, a long-term 30-year loan? What is it that you need, right? Everything is different, right? So that's like the thing I want to hammer out most is know your strategy, know what you want to do with this, right? Because that changes everything. And then operate it like a business. Definitely operate it as a business, right? Have a P&L, profit and loss statement, know your numbers. This is how much money it costs me every month in gardening fees, pool fees, and I'm tying this a lot more to real estate, but you can use this strategy, and you should use this strategy for any type of investment. What is it costing me? Is it costing me management fees? Is it costing me, is it a 401k? Are they charging me per trade? Is it, I'm day trading on my E-Trade accounts. I'm getting charged holding fees. I'm getting charged this. And, again, know your numbers, know your expenses. One of the things that we talk about in business and the corporate world a little bit, but it's KPIs, your key performance indicators. What are triggers that you're looking at in your investment strategy that mark either success or mark when things are going sideways and you need to pivot? Know what are those items, those indicators to help you make your decisions, to help you execute what you need to do. But definitely have systems in place to run your business. Creating monthly reports. Talking to your tax people, quarterly, and getting prepared. What else? What do you need to change so that when tax time comes around, you all of a sudden not hit with this huge tax bill, and if you are, you're not, that's something that you're not prepared for. At least you have thought of that ahead of time, right? And you're prepared for it, or it's a punch in the gut if all of a sudden you're like, hey, you owe $40,000, whatever it is that you owe, and all of a sudden you're like, oh, I wasn't expecting it. And if you are, at least you can plan ahead, save for it, do the things that you need to do so that you can prepare, so that you can stomach that blow. Because that's not a nice feeling. But really, it's a mindset, right? Are you a CEO or are you a hustler? Right? There's positives with being a hustler, right? You're aggressive and you're doing this, but it's not a business. That's not something that you can be for long-term success. That's the one and done. That's the guys that are going to make a buck, turn it, but you don't have longevity. If you want to create something, if you want to create generational wealth, you want to create a model that you can leave to your children and your children's children, and you can teach them. One of the things that I do with my kids, and some people laugh, but all three of our kids are on our board of directors for our corporation, for our parent company. And quarterly we do board meetings with them, right? And I don't get into, and I say kids, they're all adults. We don't get, sometimes too much into the weeds with them about it, but I do give them kind of like a highlights of the business. What are our goals for this year, strategies that we're approaching? What are some of the things that we're trying to do for growth long term? Just mainly because I want them, it's in their head already, so that when, if when the time is right, and however the cards play out, if one of them is going to take over, or all three of them are going to take over, or two, however it is, and they will at least know how I decided to structure this, and how and I say I, but it's my wife and I, and she will tell you every day she is the chairman of the board. Um, she very much is. Um, so it's, one of the things it's important for us to share with them, and for education purposes. But I think it's important for them to know, and it's starting to register of how we run a business, how we have multiple entities ourselves, and we have different lines of business and different things that we structure. And I want them to understand how that plays, so that one of them is already having his own business, and he's looking to set up his own LLC, and hopefully we can give him some advice on how that's done, and some approaches for that, and hopefully he's absorbing some of our knowledge. I've been doing this for a long time. Some of that knowledge to be able to use some of those tools into his business. So it's exciting to see. So again, it's, do you want to be a CEO? Do you want to hustle for the rest of your life? One of the things that I was taught very, very early on with business, it's a lot of people start a business, but all they're doing is they're creating a job for themselves. Or do you want to create a business that you can operate and sell or hand it off? Or is the business just a job for you where, hey, if it isn't for me performing this task, then there is no business, right? And that's, again, mindset change of how you approach things. And that really determines, I think, in my opinion, success. And the people who have longevity, people who have long-term success, people who can build something that's a tangible asset where, hey, I own this business. So think about those things. Think about your taxes. Get ahead of it. Think about, do I need an entity? Do I need a corporation, an LLC, a trust? What is it that I need? Talk to people that can help you with that. Don't leave things up to chance. Know your numbers. Be intentional about what you spend or how you spend it. When it comes to your business, invest like a business. Invest not as a hobby, right? Take those right things. And number one, know your strategy, right? Strategy is key. If you know what you're trying to accomplish, then the likelihood of you getting there is a lot higher than just stumbling upon success. Because if you don't know what you're trying to do, then you're just kind of throwing darts at a wall and hoping something sticks, or some sayings. I don't know about that stuff. So stop guessing. Have a structure in place. Know your investments. Know your strategy. Surround yourself with people. Ask questions. Talk to us. This is literally what we do. We help people invest in real estate. We help people invest in debt. We help people, get mortgages, buy properties, sell their properties. Like, talk to a professional. Set an appointment with us. We'd love to talk to you. As the year's starting, this is something that I do for the benefit of people that I know. Right? Anybody who's listening and wants to have a conversation, give me a call. We do something on Zoom. We can meet in person. Whatever it is, I just love talking about it. So have a plan. Go after it the right way, and you'll have a lot more success. So thank you guys for listening. That's all I got for you today. Hopefully we'll get some more exciting topics coming up this year. But excited to see where 2026 puts JSS and all our followers. So thank you guys, and see you guys next week.